Microsoft already, they kicked off the week. They sort of set the tone, and that's not uncommon.
Yeah, it was interesting. They came out, with the press release. Their stock goes up, right? They had some great stuff. People are talking about, hey, the recession is not touching. Everybody got excited, and then the call came, and the stock went down. I felt a little bit like the rug was pulled out. Market Watch's Jeremy Owens warned on Twitter for people to do that. I didn't see his tweet, but I'm going to be careful next week when I'm talking about Microsoft here. I mean, here's the highlights. I mean, revenue up 2%, operating income off 8%, net income up off 7%, EPS was off 6%. But I think there are highlights where you would expect there to be highlights. So first of all, you need to understand there are some things that companies just can't turn off, okay? And you can't just turn off using Word, PowerPoint to save money. I mean, what else are you going to do? Sure, you could go use some free service, but that's not going to work in your corporation. Office 365 was up 11%. You've got a lot of people getting laid off. Where is the first place they're going to go? They're going to go to LinkedIn, right? Sessions were up 10%, record engagement. Microsoft 365 subscriptions were up 12%. Again, when it comes to something like ERP, you can't turn that off. And we're going to get into a little bit when we talk about SAP. Actually, I misspoke. Microsoft Dynamics 365 was up 21%. And what else would you expect? The PCs were down, and they were down a lot, right? Market was down 29%. Microsoft was down 19%, and that was a combination of Windows being down, 39% on OEM. Little surprised at the Surface decline of 39% because it was just so much higher than market. But I do know that Surface and Apple MacBook, those two brands go head to head, and Apple drove a lot of market share over the last quarter. Now, I left what people lead with. It seems to be the only thing that people care about related to Microsoft, and that's Azure, right? Azure was up 31%. Still awesome. They had a tough compare, though. It's down from 46% year on year, but they did slightly better than expected. One final comment that I thought was interesting that came up in the intelligent cloud portion was that energy cost increased. I don't remember seeing this in any other disclosure for a major cloud company, but makes sense, right? Energy is going up. We're cutting off certain aspects of energy. We have embargoes of energy over in Western Europe, and they've had to switch significantly to different sources, particularly around natural gas. So something that I think I'm going to be watching in the future.
Yeah, you hit a lot of it there, Pat. I mean, the energy thing is very interesting. So is FX. We've seen a little bit of a cooling in terms of the dollar, which has actually been a bit of a tailwind for these companies. It could have been worse, actually, had the dollar been stronger coming into this quarter. You look across the Microsoft, nothing about that kind of fall that came after had to do with really this quarter. This quarter's numbers were actually pretty okay, but the guidance was extremely cautious. And for Microsoft, that's a change of tune. Over the last several quarters and past few years, there really hasn't been what I would consider much of a caution in guidance. It's been generally pretty bullish. Pat, we keep hearing because we got to make a disconnect from the public equities market and the actual economy. And so remember, for a year when the market was still showing good results, stocks were falling. So Microsoft and Amazon, they were showing great growth in every quarter. And you and I, because obviously even as personal, or you look at our own portfolios and you're like, whoa, they're these great numbers, and yet they're down 30, 40, 50s. So, you look at that. And then you kind of see now when things are actually starting to get bad, most of the pundits would say, when is the recession going to really be seen? They talk about the latter part of this year is when we're going to actually measurably see more of a recession. Now, again, that's debatable because we make that political, because I think we've kind of been in one for a little while now. But you've got some certain numbers that prop up or pull down, like rents and energy, that can disproportionately make things like inflation or the economy look strong. For Microsoft, you've got, you had a 31% Azure growth, I believe it was.
That's right.
Not a bad number. You had a lot of parts of its businesses looking healthy. Dynamics 365 looked healthy. The Teams number, 280 million active monthly users now. They've absolutely taken that, they've barnstormed that industry. And that goes back to what I said about Slack and others have not been able to keep up at all. They've got the market pretty well surrounded. They're well diversified. So, it's not like they're overly rotated to consumer. Surface, when the market was screaming, didn't go up that much. And now the market's falling. I'm thinking it's probably not going to fall as hard either, because, they haven't really gone full out on Surface. And there's obvious reasons with that tied to Windows. And I know, Pat, you follow that even closer than I do. So the long story long on this whole Microsoft thing is that they will bounce back. And when the economy bounces back, they will roar back. Will we have 2 or 3 quarters of slowing? Yes, it was bound to happen. And what's really funny is don't be surprised if the equity price is disconnected from the fact that Microsoft's results actually get worse. And the last thing I'll say is, remember when they grow 31% in cloud? That's 31% over a number that was 40-something% a year ago that people thought was massive. So they're growing still in mid-double digits over what was considered to be a massively good result during what's considered to be a horrible period in the market. So I don't know. I just think we've lost our mind.